If I want to start the video,
your video is on already.
On.
See your video.
Okay, so when I introduce my one, I want to start talking.
Sorry?
You can.
Yes, you just start talking. So this is your video now.
No, you just said that you want to use it for.
So this is where you, if you want, this is a different. If you want to be seeing the person that is talking, you see the gallery, everybody, you can see all their videos. So this is what the participants will be seeing now. But we have not started.
Yes.
Yes. So, you know, we have transferred host to him. So it's him that will start it now. So we need to inform him.
So, but the other one
So we have transferred because I thought you wanted to test his video.
Okay, so you should also transfer so that
you should transfer so that you can start. You can you hear us here? You can tell him to unmute, maybe you talk to him or something or chat with him. Hello?
Hello, Prof.
Yeah, Prof, you need to transfer.
I can hear you.
Yes, you need to transfer the host to me so that I can start the meeting. Then when I after introducing you, I will transfer.
No, but I'm not the host now.
Sorry?
I'm not the host.
No. I transferred host to you so that I can share the. Okay, let me reclaim it here. You are the host. If you see your name, let me try.
I'm not the one sharing now.
No. See, sir. Hello, hello, Prof.
Yeah.
If you look at the participant panelist list, you will see the host name, your host in front of your name. So right click on the name Uche Uwaleke and say make host.
Okay. Make host.
Yes.
Okay, I've sent it.
It's not yet done.
I've sent it. Huh?
Let me see. You are still the host, sir.
So what do I do?
If you look at the name, look at the professor's name, you see more. Can you see more in front of it?
More. Okay, I have to go back to.
When you click on professor's name under panelists,
yeah.
Can you see when you click on the name, you see mute and more?
Yeah, I saw more.
When you click on more, what are you seeing, sir?
I saw stop video, spotlight video, make host.
Click on that make host.
For video record, rename.
No. Click on the make host.
Okay, I've clicked. Make Uche now.
Host.
I've done it.
All right, thank you very much. You have done it now. So when it's 12 o'clock, we will start the meeting. And when it's time for you to do presentation, you will just click on share your screen. You click on share screen.
No, I'm not sharing anything. I'll just speak.
Oh, you are just speaking?
Yeah.
Okay, now your video is not on. Can you try and put on your video, sir?
All right, okay.
Yeah, so we are on now.
But I know how to talk now. I'm sure.
Okay, you don't need to put on your video, sir.
I'm unable to start the video. You're showing me I'm unable to start the video.
No.
Make me start the video because you have enabled me.
No, sir. At the bottom of your screen, can you see your mic icon and your video icon, sir?
Yes, I can.
And it's telling you unable to start video?
Yeah, it's showing unable to start video. You can't start your video because the host has stopped it. The host has to enable my video.
Okay, just a minute, sir. No, I don't know. We should be able to start this video.
Okay, when I introduce him, I will make him host.
Go through the same process of making him a host and see whether I can be released.
Hello, Prof.
It's still showing that
Yes, Prof. As soon as I finish the introductory aspect of it, I will make you the host so that you can share your video and speak, if you don't mind.
Okay, well.
Yes.
But there's no need for, is there any need for that? I thought my video, you can be speaking and my video can be on. People can see my picture, whatever.
Sorry?
Yes, if you join with video, people should be able to see your picture.
I'm sure.
Yeah, it's not. It's only showing my name. So you have to enable it. The host has to enable everybody.
Just a second, sir.
Yeah.
So attendees will start coming in. So you can see from here. No, only 2 panelists have joined. You and
the other person has been trying to join. Ex-president. Are you trying to join? But he won't have any problem joining. The other participant.
no, I won't have any problem. Yes, you can start. There's a webinar going on, so voice.
Okay. Yeah, a very good day to you. It's noon, and I have the pleasure to welcome you to the very first webinar of the Association of Capital Market Academics of Nigeria. This webinar is being organized against the backdrop of developments in the capital market, the backdrop of COVID-19 and its negative impact on the capital market. Once again, it's my pleasure to welcome you. My name is Uche Uwaleke, and by the grace of God, I am the president of the Association of Capital Market Academics of Nigeria, an umbrella body of academics in tertiary institutions in Nigeria who teach capital market related areas, including economics, finance, accounting, business admin, banking, and law. So once again, welcome to this webinar. As I said earlier, or rather as I communicated to you earlier, it's going to be a brief one, a maximum of 1 hour, 15 minutes. Fortunately, we have our panelists set. We have identified 3 people, eminent Nigerians, distinguished Nigerians with a lot of pedigree in the capital market and in the finance world in general, to speak to us on the implications of COVID-19 on the capital market. How do we mitigate the impacts of COVID-19, with special emphasis on the role of stakeholders? Who are these stakeholders? We've identified the regulators, we've identified the market operators, and of course the academia principally. So this afternoon, the panelists will be talking to us on the roles of these various stakeholders. Again, by way of background, as you know, it's with emphasis on the Nigerian stock market, Nigerian capital market. COVID-19 has been exerting serious pressure on global markets, on global stock markets, whether it is in the US, for example. If you look at the S&P, or you look at the Dow Jones Industrial Average, year-to-date return has been negative, apart from the NASDAQ, of course, for understandable reasons. The NASDAQ is the index for high-tech stocks. And in this era of new normal, it is stay-at-home stocks or high-tech stocks that are enjoying patronage. If you go to Europe, the FTSE 100 of the UK, year-to-date return is also negative. The same with the German DAX and the France CAC 40. In Asia, it's the same story. Whether it's a Nike 225 or Shanghai index, it's the same thing. So year-to-date return has been negative on the average globally. If you also look at the Morgan Stanley, the MSCI, whether for emerging markets or frontier markets, it is the same. For Nigeria, the Nigerian Stock Exchange All-Share Index, which is the benchmark indicator, is about has gone down by about 10%. Year-to-date return is about 10% drop. So how can we mitigate the impact of COVID-19 on the stock market in particular and the capital market in general? That's also bringing in the other asset classes. And with us to share thoughts on this we have Dr. Suleyman Ndanusa is somebody I consider the face of the capital market in Nigeria because he alone holds the enviable status of having been DG, Securities and Exchange Commission, and also the chairman of the Securities and Exchange Commission. He is in a position to talk to us on the role of the regulators. Dr. Ndanusa is also has a passion for academics. He is an adjunct professor of capital markets, and we have no doubt that he will be doing justice to the topic. The other speakers are, we have the president of the Chartered Institute of Stockbrokers, that's talking about Tunde Amolegbe, who will be talking to us on the role of market operators, and the a top academic in the academia, a professor of finance, a derivative expert, who is with the Federal University Otuoke. That's talking about Professor Wilson Herbert. So three of them will be talking to us on this topic. So each speaker will have 15 minutes to address us. That brings the total to 45 minutes. Then we'll have the remaining 15 minutes or 20 minutes thereabout for your reactions. And for those reactions and questions, I would encourage you to send your questions, your reactions to the question and answer box on the chat area. As if with time permits, we'll take on a few of them and address them before the webinar is formally closed. So once again, I welcome you to this webinar by the Association of Capital Market Academics of Nigeria. Well, without much ado, may I invite the first speaker, that's Dr. Suleyman Ndanusa, to address us on mitigating strategies of COVID-19. How do we mitigate the impact of COVID-19 on the capital market, with special reference to the role of regulators, himself having been at the apex regulatory body at the Securities and Exchange Commission. So Dr. Ndanusa, over to you. You have 15 minutes.
Thank you very much. Thank you very much, Professor Uwaleke, our moderator. Good afternoon, distinguished ladies and gentlemen. I'm honored this afternoon to join this conversation together with other very eminent panelists. The role of the regulators in mitigating the impact of COVID-19 on the capital market is my own share of contribution that I was asked to speak to. The impact of COVID-19 is still very severe and ongoing. And despite the ease of lockdown in most of the countries, including Nigeria, the uncertainty occasioned by COVID-19, and in the case of Nigeria, the oil crisis and the pre-existing development crisis continues to heighten. Like many African countries, Nigeria's capital market is largely bearish. The first quarter of the year 2020 closed in the red territory with a negative return of about 20.65%, as against a negative return of 1.24% in the first quarter of 2019. The Nigerian Stock Exchange market capitalization lost about 2 trillion in the first quarter of 2020. Despite the positive performance of the stock market in April, May 2020, in terms of market capitalization and price gains, there is still concern in the continued increase of incidences of COVID-19. For many analysts, therefore, in the market, this may impact on economic data, production, consumption, investment, overall output and performance of the economy. Given the above COVID-19 scenario, therefore, it is therefore no wonder why the question as to the role of the regulator or regulation in mitigating the impact of COVID-19 on the capital market is very important. We all know that the modern free market economy is dependent on a sound capital market for capital mobilization. It is therefore necessary also to ensure the market is protected as far as practicable from failure, and where it occurs at all, its impact is minimized. The 3 pillars of capital market regulation on which regulation stands and regulators depend on, whether in good times or in bad times, are to protect investors, to ensure markets are fair, efficient, and transparent, and also to reduce systemic risks. Above objectives are interrelated as regulatory signposts, even in the best of times, and much more a challenge in the worst of times, like this period of COVID-19. The 3 objectives are further elaborated and supported by 30 IASCO principles of capital market regulation, which are grouped into 8 categories. 1 is principles that relate to the regulator himself, how independent, accountable, with clear objectives, adequate power and resources. Another objective is the principle for self-regulation, how equipped are the SROs. The principle for enforcement of securities regulation. What is the stage and level and effect?
Okay, now you can talk.
Yeah, Mr. President, you can go ahead. We can hear you.
Tell him to unmute his mic.
Mr. President, unmute and go ahead. Yeah, let's go ahead. Let's go ahead. Let's unmute and go ahead. Yes, let's go ahead.
Good afternoon. The pandemic. I actually have a presentation which I'm going to talk, and I'm going to try to speak to regarding the topic that has been given to me. Right. Dr. Ndanusa has done a fantastic job of issues surrounding the capital market regarding the pandemic. I'm going to try to I'm going to speak to the issues as it affects market operators. So the COVID-19 was declared a pandemic sometimes early February this year, and the impact on the world economy as a whole and on the Nigerian capital markets in particular is living through at the moment. My paper will try to distill what the impacts are, what we're feeling now, what we're likely to experience going forward, and the likely mitigants that the community, the capital market community, comprising of the operators and the regulators, could seek to put in place in order to mitigate and ensure that we have a viable market at the end of all of this. As we all know,
is comprised essentially of the apex regulator, that's the FCC, and the various market platforms, the XROs.
the main operators are the
stockbrokers, issuing houses, the asset managers, the registrars, investment managers, and
stockbrokers, issuing houses, the asset manager,
along with the
presently we have 5 securities exchanges in the country. The Nigerian Stock Exchange, which trades
mainly in equities and other instruments. We have the FMDQ, which deals primarily in
the NFMQ, which deals primarily in the fixed markets, the NASD, which trades primarily in.
It is the only body empowered by law to certify capital markets operators in the Federal Republic of Nigeria. We determine
the type, form, and scope of training required by individual to practice in the capital, in the securities and investment industry in the country, and we also provide appropriate certification for qualified professionals in the industry. The Institute is also empowered to take disciplinary action against any AR member, and we're also involved in industry and market advocacy.
Our professional exams include
our professional stake in order to become stockbrokers. So a chartered stockbroker basically is capable of doing all of this in the financial markets. So they could be financial planners, they could be investment bankers, they could be compliance officers, risk managers, fund managers, etc. Now, what has the coronavirus done to the global financial markets and to Nigeria in particular? This slide speaks to the basic numbers. It was discovered in December 2019 in China. It's now gone through to well over 200 countries. At the last count, we have well over 12 million cases as at July 9, 2020. Over 500,000 deaths already worldwide. No cure, no vaccine. Major businesses, major airlines are shut down due to the coronavirus pandemic. In Nigeria, about 30,000 cases have been reported, close to 700 deaths. We have lockdowns in the airline industry. Schools have been shut down, and lots of negative impact on the people's welfare and their income. What about figures regarding the impact of the coronavirus? Real GDP that closed the year 2019 at 2.2% is projected to close 2020 at negative 3.2%. Oil prices, which is particularly important to us in Nigeria, closed the year at $65 a barrel, 2019. It's projected to close 2020 at about $30 a barrel. Inflation rate closed 2019 11.4%. It's projected to close 2020 at 13.8%. The NSE OSHA index at present is negative 8.8%. is projected to possibly go down even further. Unemployment levels keeps rising. The informal sector is suffering. So the global pandemic has been all negative for the global economy and the Nigerian capital markets in particular. So what are the specific impacts on the capital market as we know it? The capital market as it's constructed is supposed to be the engine of growth and source of long-term liquidity for the economy. It's supposed to facilitate the successful indigenization. It has successfully facilitated the successful indigenization of the economy in the past. It has enabled multiple expansion of the Nigerian banking system. It has enabled the quick recovery from the last economic recession and remains the most effective medium of funding Nigeria's huge infrastructural deficit. What have we seen the pandemic do to us? Trading functions remain, though trading functions remain uninterrupted, but obviously volumes and values have been affected. The fact that the stockbrokers and the Nigerian Stock Exchange particularly had been proactive to ensure that technology was put in place to ensure that, you know, when such events happen, we are able to remain trading, can be said to be a huge positive on the part of the industry itself. But still, the investors we are serving are still not being able to participate as fully as they were prior to the pandemic. On the part of the CIS, we are able to continue to carry out our activities. We continue to conduct online trainings, and our hope is to be able to hold our examinations and certification online in due course. Within this period too, despite the logistical difficulties, investors are able to still continue to earn their dividends. Again, thanks to the technology that have been put in place prior to now. The capital market community has also made an effort to try and alleviate the difficulties the people are, you know, experiencing regarding the COVID. The SEC took the lead in establishing a 1 billion naira capital market-led COVID-19 relief fund, and various aspects of various players in the capital market have contributed to that fund. The NSA has also launched a massively successful Mask for All initiative that seeks to distribute masks to the community at large in order to protect the populace. All right. So, what really are the downsides that we are seeing in the capital market? Obviously, investors' purchasing power has reduced because, I mean, incomes have been affected due to the shutdown of most businesses and reduction in commerce generally. Clearly, this is also going to impact the income of the capital market operators, since their investors are not able to, you know, carry out the kind of capacity of trades that they used to do prior to the pandemic. We also see a situation where some of the major initiatives that the market has embarked on prior to the pandemic clearly will have slowed down now in execution. Prior to the pandemic, the pace of demutualization of the NSC was moving quite fast, but it is expected that that will have slowed down now. Since I represent the Chartered Institute of Stockbrokers, it's expected also that the funding challenge we have as an institute will also possibly be aggravated due to all of the factors mentioned previously. So what are the mitigants that we will suggest? to these issues. Given the importance of the capital market sector to the Nigerian economy, the federal government of Nigeria should treat the capital market as a sector, as a critical sector regarding COVID-19 elevation strategy. In view of the existing constraints with regards to trading liquidity in the market, and by then these existed prior to the COVID-19 pandemic, we feel strongly that the CBN, just as it is putting in place various palliative measures for various sectors of the economy, should possibly look at ways by which it could provide liquidity to CMOs to ensure that our markets are functioning the way they should function. Ultimately, we expect that various companies will enter the primary market to raise liquidity post-COVID lockdown. The capital market, if liquid enough, will be able to provide these services without hitch. Also, investors that have their investment in the secondary market, in the capital market, should be able to cut off those investments if they need to, as long as the market is operating smoothly. And really, this can only be guaranteed if CMOs have the required liquidity to operate. So this provision of liquidity obviously can come in various forms. They can come through the banks in forms of lines of credit, and they can come even in form of bringing back the margin trading programs, which was operated prior to 2008 financial lockdown. It's clear that the market now and the regulators have the capacity to monitor margin trading in the market much better now, such that the negative impact can be minimized and the positive impact can be alleviated. With this, there will be liquidity that will ensure that the secondary market is operating seamlessly. We will also say that if there is any thoughts or any intentions for the regulators to consider increasing the capitalization of capital market operators, it should clearly be put on hold as the market works through the pandemic situation. COVID has also shown that it's possible to run a 100% e-brokerage in Nigeria. The Nigerian capital market, especially on the NSE, has operated online successfully now for the last 3 months. The present structure of CMOs is such that they are required to have physical locations. They are required to have some specific minimum operating standards in those physical locations. Maybe it's time for the industry to take the bold step of actually considering licensing digital brokers that would not necessarily have to have physical locations. This will have tremendous benefits regarding cost savings, and it will also have the benefit of making brokerage services and capital market services available to a larger audience of people, especially people that are located in remote areas. Also, the industry needs to have a concerted effort towards reducing the phenomenon of unclaimed dividend. Well over 100 billion is tied down in unclaimed dividend with the various companies. Now, this is 100 billion a portion of which that could ultimately find its way back into the capital market. If the industry works together, this amount of unclaimed dividend will be reduced, and it will have the effect of encouraging investors to want to not only increase their footstep in the capital market, it could very well encourage them to even want to put those dividends back into the marketplace. This clearly is an issue that needs to be kept at the front burner at this point. And given the technology capacity the industry have demonstrated in the last few months, we feel that those technology could be applied towards resolving this unclaimed dividend issue too. We will also suggest a reduction in the time to market for primary market instruments. So we foresee a situation where lots of corporates will approach the capital market post-COVID to raise capital, to show up their working capital or other forms of capital. The capital market will help this process by reducing the time it takes between the proposed issuance and the time to market and closure of such offers. Because the earlier companies are able to raise capital, the better for the economy as a whole. We will also suggest an acceleration of the launch of the derivative markets. The situation we have now really is the worst nightmare of any risk manager, because some of the risks that a risk manager would typically classify as long-term low risk are now happening in real time. Now, the launch of the derivative market will have provided a platform or provided instruments that will have assisted in mitigating some of these risks. While I'm aware that the Nigerian Stock Exchange is working assiduously towards launching and have actually gone to an advanced stage in launching its derivative markets. This effort needs to be speeded up and brought to markets as quickly as possible. Recommendations for capital market operators. Clearly, the need to embrace technology cannot be overemphasized at this point. I know a lot of us are already doing that. The more of that we do, the better for us. Of course, we should also ensure that we keep with all the health recommendations that the government is putting out: social distancing, use of face masks. It is also time for us to actually try and employ and empower our staff. This is the time to actually try and do that. Invest in staff training, market research, communication tools, the social media service, and increase our footstep in the digital marketing space. My final thoughts. The Nigerian capital market has been substantially challenged by the advent of the COVID-19. The equities market, which drives performance of other market segments, have been characterized by low investor patronage and low trading liquidity for some time now. And I'm afraid that this could be aggravated by the advent of COVID. Given the importance of the capital market to Nigeria's economic growth and development, especially in the area of infrastructural development and the expansion of local industry, it is pertinent more than ever before for the federal government to give frontal support to the market now. The CBN and the banking system should provide support to the capital market by the provision of liquidity, while capital market operators on their part must keep pace with technology and embrace the new order of business, which is essentially defined by online and remote operations. As a wise man once said, never let a crisis go to waste. This is our moment to get to where we hope to be. Thank you very much.
Yeah, many times the president of the Chartered Institute of Stockbrokers, Tunde Amolegbe, indeed very grateful for the wonderful presentation that's coming on the heels of the excellent presentation again done by Dr. Suleyman Ndanusa. So we thank you, the CIS president. You started by providing a background. Of course, you didn't lose the opportunity. You seized the opportunity to talk about the Chartered Institute of Stockbrokers and your various activities. You drilled it down. You talked about the role of the capital market in the economy. You said the capital market has played a major role, one of which is helping to finance government budget deficits. You also, in specific terms, you talked about the impact of COVID on the stock market, the fact that it has eroded the income of capital market operators, as well as slowed down the demutualization exercise. You strongly advocate that the central bank should come in to provide liquidity for the capital market operators, especially equity traders. You're also recommending the suspension of any recapitalization plan by the regulators. And you're also saying that margin trading may be considered at the moment. You also think it is possible to go 100% e-brokerage, not necessarily having a physical location. This is one of the lessons that COVID-19 has brought, that it is possible to do that since over time, the last couple of months, that has been done successfully. And closely tied to that is the fact that the regulators, again, shouldn't be so hard on the minimum operating standard for capital market operators, that it is also possible to license, according to digital brokers, those that don't necessarily require, physical location. I think I saw a bit of that some time ago in South Korea when I had the opportunity of visiting Busan. Busan is one of the major cities in South Korea. That's where you have the stock exchange. The equities exchange, if you like, in South Korea doesn't have a trading floor. There's no trading floor in some of those countries now, where everything is trading is largely e-based. So you're advocating that kind of thing here in Nigeria, where brokerage firms don't necessarily need to have a physical location. You also talked about the need to address the issue of unclaimed dividend. I think this morning I read that the figure has gone as high as 150 billion naira unclaimed dividend. And you think innovations, you talked about additional innovation. If time permits, I would want you to be a lot more specific what you mean by additional innovation to solve the issue of unclaimed dividend. Of course, e-dividend mandate has been there, but to what extent has it helped to address this problem? So the additional innovation I talked about, maybe if there is time, you can be a lot more specific. So in general, you said CMOs should embrace technology. I think this much too was emphasized by Dr. Suleyman Ndanusa in his, when he talked about innovation generally, even with respect to regulation. And part of your recommendation too, you're also saying, well, this is a legacy issue that efforts should be made to reduce time to market, particularly in the primary market, and the issue of derivatives too, to help mitigate risk. The regulators, I'm aware, the Securities and Exchange Commission has been in the forefront of ensuring that we have derivative products in our equities markets. The same with the Nigerian Stock Exchange, working in conjunction with the SEC. So these are the things you've advocated, and for me, they stand to reason, they make a lot of sense, and they also reinforce what the first speaker said. So thank you very much for that, Pepper. May I now have the pleasure to invite the third and final speaker for today. That's Professor Wilson Herbert. Professor Wilson Herbert will be talking to us on the role of the academia. This webinar is being put together by the Association of Capital Market Academics of Nigeria, and we feel we need to talk about the role of the academia. Does the academia, or do members of the academia have a role to play in all this? What's the role of the academia in all this? So we have brought to you a top academic, a top scholar, a professor of repute. As I said, he has a PhD in financial derivatives. The CIS president, you may be interested in this. This is one man that has a PhD in financial derivatives from a university in the UK, I think. And today he's a professor of financial management and currently lectures at the Federal University, Otuoke. So Professor Wilson Herbert, if you're on, you have the floor for 15 minutes. I think I'll start.
Yes, mic is. Hello.
Hello, Prof. We can hear you.
Yeah, Uche, what's happening? Yes, can you hear me?
Yes, Prof.
Can you hear me?
We can hear you, Prof.
Okay. Are you seeing me?
Yes, go ahead.
Hello.
Go ahead, Prof.
Okay.
Go ahead.
Well, thank you very much. Let me join my co-panelists. Yes, let me join my co-panelists in welcoming the organization of this webinar. I'd like to thank Uche, my friend Ndanusa, and Tunde. I think fine things. First, without COVID-19 pandemic crisis is the world's greatest challenge, at least in the last 100 years. Not only with respect to the extraordinary cost in human lives, but also in forcing behavioral changes in our daily lives, irrespective of country or community status, developed or developing, social status, rich or poor, ranging from physical distancing, stay-at-home order or lockdown, to finding a lasting medical remedy very quickly. Since late January, the wave of citywide closures, quarantines across the world have locked down restaurants, places of worship, economies. Supply chains have been disrupted globally. The pandemic has prompted unprecedented fiscal and monetary responses running into trillions of dollars worldwide. Second, it must be admitted that the reign of Nigeria's economic recovery began long before this COVID-19. So we will not blame them on the COVID-19. This began to beat us. Yes. We possibly cannot know where we dried our bodies. A historical foray into the prevailing conditions that form the bedrock of Nigeria's economic development quagmire. It situates the problem in
in 1986, actually structural adjustment program in reference to prebendal politics, corruption and mismanagement of the country's human and natural resources. Although some analysts, such as Claude Ake and others, have argued that many of the seeds of dysfunctionality of the Nigerian state had been sown much longer than that. Let's be certain, before the pandemic, Nigeria was already highly exposed with high debt profile, large fiscal deficit of debt service to revenue ratio. The capital market is not left out as a critical transmission channel of the ongoing global systemic shock. How do we interface it with capital market? This webinar draws attention to the responsibility of the capital ecosystem in creating the momentum to rebuild public witness residual collapse. The pandemic has inhibited sustainable development and disproportionately harmed vulnerable countries and communities like Nigeria and other sub-Saharan African countries. It has eroded public confidence and has brought to the fore our vulnerabilities to bad economic policies or inadequate attention to important public services such as health, education, electricity, and infrastructure. In addition, the international financial institutions, notably the IMF and the World Bank, continue to influence domestic economic and social policies of African countries in ways that some have thought undermine economic independence, domestic capacity, and egalitarian socio-economic development. African governments and their people have become so gullible and so to the ideas and policies of these institutions and their allies that the incoherence between their economic prescriptions and national development goals and aspirations is all too apparent in the aggravation of poverty and deprivation, especially during this pandemic. This webinar also canvasses the academia in finding solutions to COVID-19 through and to the stance to reason, doesn't it? That if medical research leads to discovery of palliative medicine, palliative care and vaccines for COVID-19, normalcy will consequentially return and the effects of the disease will be mitigated for both the global economy, of which the capital market is a part. In the circumstances, this webinar also seeks to highlight what the capital market can do, not to return to the old ways, because I think it will be infeasible now, but how to navigate the uncertain waters of technologically driven, defined by fiscal discipline and other prophylactic protocols and measures. Let's take a best eye view of global significance capital markets. We know the capital market is a critical component of the domestic and international financial system. We also know that the stock market returns are a critical sustainability factor for investment decision making. Investors and capital market participants pay particular attention to the properties of capital market behavior because equity returns volatility is a barometer of uncertainty. Furthermore, the behavior of capital market instruments is fundamental in sustaining the interests of present and prospective investors in asset allocation, pricing of primary and derivative assets, portfolio selection and diversification, and risk estimation and management. Global crises are fertile grounds for capital market volatility. This pandemic presents enormous challenges as well as opportunities. The strength of capital market derives from its capacity to discriminate among good and poor risks, the informational efficiency of the market. Let us broadly contextualize the role of education as a basis of pigeonholing the place of academia in macroeconomic development, and more specifically in mitigating the effects of COVID-19. As we all know, education is important in any economy. First, because it is the engine that drives economic development. Second, because of the imperatives of globalization, even though globalization has challenges now that may turn into forms of globalization. And third, because of the positive effects and changing nature of technological advancement. The convergent impacts of these three forces provide the critical dimensions that underpin the importance of knowledge and human capital as the main driver of development. Knowledge is at the core of a country's competitive advantage in the global economy. The intellectual capacity on which knowledge production and utilization depend. It is a unifying theme for A, understanding the nexus between the role of academia, human capital development, and high-level productivity, and B, defining the strategic role of academia as a necessary instrument for propelling the vision and agenda of solution providers for economic growth and development. Let's be clear. The ramifications of development redound to human development. In 1990, the UNDP redefined the development in terms of human development, which embraces both economic and social development, de-emphasizing per capita income as the traditional index of inadequate attention and budgetary constraints to tertiary level education in particular have become a knee on the neck that have over the years been asphyxiating academic research in Nigeria's research budget to support the university's key research centers, in addition to the Debt Fund National Research Support Fund. Imagine that the research budgets of the top 10 US universities range from over 500 billion naira for the 10th to excess of 1 trillion naira for the first. These are the institutions we are competing against in educational development. Meanwhile, the entire budget of Federal Ministry of Education for 2020 is about the research budget of a top US university. To what extent are academics interrogating government policies? What are the research involvement relations of Nigerian academics with respect to COVID-19? Let's look at this and how this can help to mitigate the impact of COVID-19 on the capital market. Nigerians and Africans feel a sense of urgency for collaborative research among the scientific community to drive up robust scientific assessment of local capacity in testing kits, personal protective equipment, and in the curative medicine for COVID-19. Our Nigerian and African scientific community should accelerate their local capacity and minimize our dependence culture on foreign supplies and donations. Must we wait for vaccines and supplies from China, Japan, India, Europe, UK, and USA? While funding is a major handicap, it should not impede or block our thinking. Scientific discovery efforts will mitigate the damaging impacts of COVID-19 on human lives and businesses, and prospectively stimulate capital market activities. In addition to the research being undertaken by academics in the medical and allied professions. The following important contributions from the economics, finance, and broad business disciplines will rev up activities in the capital market. 1, education of market participants on the prevalence and ravaging effect of the pandemic. 2, research into the development and performance of the capital market with regards to skilled human resource development, financing new businesses through special bonds for investment in the development of urban and rural healthcare infrastructure to enhance domestic capacity in the fight against this pandemic. Such bonds may be floated at all levels of federal, state, and local. Research into food security development bonds towards making all food stores available in sufficient quantity, adequate nutritional qualities all year round across the nation. 4, how the fuel market reacting for investment like this webinar. 6, prediction of capital market behavior in a crisis period, a euphemism for this pandemic. 7, what tools are available to hedge against market downward slide due to this pandemic? 8, academics are challenged to provide vital and leading information regarding the behavior of the market under COVID-19. In general, the role of academia in COVID-19 research involves critical thinking, process thinking, forward thinking, dynamic analysis, and integrated analysis. I'd like to conclude by saying that speculation, large infrastructural deficits, uneven sectoral development, and unbridled import dependency culture. The preoccupation with foreign exchange availability or scarcity is a manifestation of a disarticulated economy. There is a wide divergence between the consumptions and real needs of the people. These are unutilized and untapped but ample indigenous knowledge in local production techniques and technologies. As investors, institutions and corporate organizations, regulators, business leaders and academics, the normal of the post-COVID-19 mandates us to change our minds, our investments, reduce import dependency mindset, stop our shopping complex or cash and carry mindsets and investments, stop unrestrained importation of products that can be produced in Nigeria, recalibrate our industrialization policy to build up domestic capacity, patronize local capacity, however rudimentary, through monetary and fiscal policies to enhance technological growth, empower the youth, and create jobs. Embark on aggressive diversification of the economy. Develop critical infrastructure. The final take could also have called off its strike the moment Nigeria joined the rest of the world and reported her first case on February 28, 2020, especially seeing that the daily cases have since then been steadily increasing without any sign of plateauing out, let alone flattening. Again, was it appropriate to use the IPPIS to egregiously reduce the salaries of academics in public universities as an assistant lecturers in Ugandan universities? How then will Nigerian universities and academics key into the global agenda of finding solutions to COVID-19 pandemic and its accompanying challenges? These are engaging thoughts in the role of academia in mitigating the effects of COVID-19 on the Nigerian capital market. Thank you for your attention.
Much, our distinguished professor. Prof, you have, of course, as expected, you went memory lane. Back memory lane, you said the challenges being faced at the moment actually predate COVID-19. We went back as far as 1986. Talked about SAP, the Structural Adjustment Program, and you said all the reforms appear to have failed, that the country is still being bedeviled by, so many challenges, including, as you mentioned, high debt profile, and that the situation is not helped by the fact that we do appear to be tied to the apron strings of Bretton Woods institutions in terms of policy, recommendations. But we also talked about the impact that COVID-19 is currently having on the economy, the negative impact it's having on the economy. And you think that the government should put more money in the area of research. You said that the budget for the Ministry of the education budget in Nigeria is not is nothing to write home about, that it is far less than what you find in a typical university, in the US. And you think more money should be put in research, especially the research for, capital market, research in the capital market. You are advocating that there should be capital market academics, those in the academia should not relent in researching on special bonds that can help in this period, such as the Food Security Development Bond that you mentioned. You also think this is also the time to escalate the education of market stakeholders. You think we should also be researching new products that are tailored to meet the the challenges posed by COVID-19. Yes, the research should also cover hedging tools. The second speaker also alluded to this, that there is need for the derivative products to be rolled out in the equities market. Of course, research will support that so that we don't run into a crisis. We know derivatives are highly, yes, we use derivatives to mitigate risk. They also, introduce their own forms of risks, in the market. You lamented the fact that this country has been depending so much on imports and import-dependent economy, and you think the economy should move very fast in the area of what you term aggressive diversification. So you concluded by, leaving us with some engaging thoughts. You're wondering why ASU didn't call off the industrial action as soon as the first reported case was announced. And you're also wondering why the government has to use the IPPIS or why government is insisting that ASU must join the IPPIS, given the fact that that structure has reduced, as it were, the salaries of academics in our tertiary institutions, particularly universities. So I think the point you have made is that there should be more money. We should have a research fund that should be made available to academics in the universities for purposes of research. Of course, in addition to what is currently obtainable. That, of course, your submission is simply suggesting that that fund is insufficient, to be able to do all this. So once again, Prof, we thank you. We understand your perspective coming from the academia. There are a lot of questions and commendations. There are mainly commendations and comments I can see here. commending the speakers, Dr. Suleyman Ndanusa, Mr. Tunde Amolegbe, and Prof. Many commendations that we can see. Distinguished participants, what I can assure you is that I am going to try to ensure that you get copies of all that have been said here today. And if you also have some questions you think that you need answers to, I will get back to you. I will link you with the speakers so that the speakers can respond to you, a lot more directly. If you don't mind, because of time, if you don't mind, I hope to conclude this by thanking in a very special way our speakers for today. That's talking about Dr. Suleyman Ndanusa, Associate Professor of Capital Market, and Fmr DG SEC, former Chairman SEC. We're indeed happy to have you talk to us today on the role of regulators. I'm sure your paper too will be sent to, of course, the Securities and Exchange Commission. I'm pretty sure is participating in this webinar. Ditto for other self-regulatory bodies in the capital market, the Nigerian Stock Exchange. All the exchanges should have people representing them here. So you're going to get copies of Ndanusa's paper. And to our president, the president of Chartered Institute of Stockbrokers, I say a very big thank you for your insights, particularly your quote. You said the wise man said that, maybe you are the wise man, you said, never let a crisis go to waste. By a wise man. I'm sure you are a wise man, the president. That's a very a good one. Your paper was rich. And the key takeaways there is that, of course, you're also asking that the central bank should ensure that as it is also, as the central bank is assisting other sectors, central bank should also look the way of the capital market operators. So recently, the government, in a very good gesture, has said it's going to assist private schools to settle the salaries of their staff. So such gestures should be extended to capital market operators, where the government should be seen to be helping to provide liquidity via the central bank. I've always said it. Central bank is, yes, the central bank is the lender of last resort. Central bank can also play the role, especially in a period of pandemic, can also play the role of market maker of last resort when it comes to crisis like this. Then, Prof, your points too are well noted. You emphasize the need for members of the academia to engage in research. While there are also scientists are researching vaccines and so on, you're saying we don't have to wait for vaccines from China, from UK. We should do our own research here to develop those vaccines. And for those of us in the capital market, we should be researching the capital market with a view to developing products that are suitable for times like this. And all of that, of course, they're all connected to the point made by Ndanusa too, that innovation for the purpose of protecting investors, is key. So on that note, I want to say a big thank you to all the participants in today's webinar. And that's assuring you that going forward, we'll be organizing webinars from time to time, and we look forward to your participating. Thank you very much, and God bless you all. It's been worth the time. God bless. Thanks.